Hello, Oracles. Today we're going to be tracking Tesla in the charts. Now, again, for a lot of you long term investors, a lot of this doesn't really mean a lot, but if you're going to be a swing trader or if you're looking for some buying opportunities to be able to add to your position at a lower price, you could take a look at some of the charts as to what's going on as we've been kind of fading down a little bit. But again, I'm just going to go into the different charts and the technical analysis that we are looking at for Tesla at the moment. And then I'll kind of throw in some of the what's going on in the news that could potentially move us one way or another in the charts. And this way, you guys can kind of use this as a little bit of a tool to look at and say, hey, maybe it's going to be something that I want to utilize for my investing thesis, and then take it from there. All right, so as we can see, Tesla has been fading a little bit over the last month. Basically ever since mid of December, we've been kind of bouncing down and trickling. So I've been talking about it before. I said, hey, we kind of look like we're on a dead cat bounce right now. We were paying attention to some levels. The first one we were paying attention to is right here at that $420 level. Said if we get above that, we really need to pay attention to see if we can continue getting ourselves to higher highs and higher lows. And sure enough, we did end up closing higher than that. And then we pushed up and closed even higher. But unfortunately, that just ended up being another peak. And now we're falling back down again. And now we're creating lower highs and lower lows once again. So right now, our all-time high is $480. And we just need to kind of pay attention to what's going on right now because we've been basically sledding downhill right from the middle of January. So exactly a month later after the high in December, we hit our high in January, and now we are fading down from here. We do have a gap above us at this $394 level. And now I've talked about it before where gaps are going to fill 9 out of 10 times on the upside or downside. So looking at these gaps here at 361.62, we do have these gaps at 358, 345, and 324. So depending on how the market is going to be reacting to a lot of what's going on with inflation and what's going on with Trump and all the decisions that he's making, we could end up seeing this coming down and pulling down to fill up at least the 358 gap, maybe that 345 gap. Again, these are just things that I'm paying attention to and looking at what's going on in the market. We have a lot of uncertainty. If you guys watched my video yesterday, you'll know that we've got a lot of uncertainty in the market. There's fear in the market as well. And it's not like one of those fears where, oh, this is that opportunity where everybody's afraid for no reason whatsoever. It's one of those breath holding fear type moments where a lot of people just aren't sure what's going on. So they're kind of just waiting to see what's going to transpire. And with Trump, you never really know. I mean, he's kind of, I don't want to say a loose cannon, but he makes a lot of decisions at random times that move the market one way or the other. So you really never know what's truly going to actually come out when it comes to Trump. So you kind of have a lot of people in the market just sitting there, just waiting to see what's going to happen because you just never know. So we could easily push back up to fill this 394 gap. And looking at how we've been kind of bouncing on this could be one of those scenarios where maybe we come back down, we kind of fill these gaps at 358, maybe 345, then maybe push back up and test 400 again and fill this gap, and then come back down further as the year transpires. I've been saying before that I think this year could potentially play out like 2022. I don't know if it will be as extreme, but for when it comes to Tesla, interest rates being higher for longer means that they're going to be facing the same struggles they've been facing over the last couple of years with higher interest rates. That means that they're going to have to put out a lot more deals that like they put out this past year when it came to financing. That's a major hit to their bottom line. Plus, they're going to be taking on the Model Q. The ramp costs of that are going to be high, just like every other ramp cost. That is totally normal, but it's going to affect their bottom line as well. We've been seeing vehicle margins coming down. We've been seeing total margins coming down as well. This year could be another one of those challenges. Now, granted, I think this is one of those scenarios where all this money is going to be invested into the correct things and it's going to end up driving the business even stronger in the future. But the near-term pain, as I put out last week, we are going to feel this near-term pain before we can enjoy the long-term gains. So I think that is how this is going to end up playing out. Is we come down, maybe fill this 345 and 358, come back up, test 400, fill this 394 to 401 gap, and then come back down from there. And then we'll end up filling this 324 gap and then that 255 gap, which was created on election day. And then at that point, the only gap we have below that is 218 from what we saw at earnings. Now, this 218 gap, this was the jump on the excitement that Tesla was on track to put out the Model Q in the first half of this year. So let's not forget that this here pushed up to the 240 level based upon that news. So Tesla needs to come through on that news. If Tesla does not come through and give us that Model Q in the time frame or the price that we're expecting, or if we end up getting the EV tax credits get cut, this could end up causing this to get filled back down to here until we actually get that Model Q out. So again, a lot of this price that we see here is not unjustified. It's just future pricing that's here. So you're looking at pricing of like this $480 level of, hey, that's $480 of future earnings that are built into this. Tesla needs to grow into this $480. So right now, the intrinsic value of the company is viewed differently by a lot of different people based upon what factors they're putting in. They're putting in FSD, they're putting in Optimus, they're putting in Model Q, they're putting in robotaxis, they're putting in Cybercab. They're putting in a lot of different future growth into this. But what is the actual money that they're bringing in at the moment? The actual money that they're bringing in at the moment gives them an intrinsic value somewhere closer to that $218 level. So again, the intrinsic value of the company will probably end up being $480 when a lot of these things come to fruition, but that might not be until 2026. So that's future pricing. That's 2 years of future pricing built into this. So now, as we're starting to see this come down, and again, I do think that in 2026, the intrinsic value of the company could be around this $480 to $500 level. That's about 2 years out, and I'm talking end of 2026, not the beginning of 2026. So you're looking at around a $500 valuation at the end of 2026, 2 years away. So at that point, I think it can hit that level intrinsically. So when you're looking at the stock price now, anything that ends up bringing it lower is just giving you that little bit of a discount on this. So the further it comes down, the bigger discount you're going to get based upon that intrinsic value for the end of 2026. That's just the way I'm looking at this right here. And again, I'm getting close in my portfolio to actually be adding to Tesla again in my main portfolio. So I'm very excited about that. I'm excited about seeing these levels coming down just because it's that buying opportunity. And I do think we end up coming down at some point this year to fill that $218 gap. Whether we go below that and end up filling the gaps down at 147 or further back at 133, 122, or 114, that's all going to depend on how bad the market is. If the entire economy is going into the tank, then I think we can see these numbers coming down here, but that's not going to be a Tesla specific thing. That's going to be a market wide thing. But again, just so that you guys see them on your radar, these are three further gaps that go all the way back here to 2023 that are on the radar. And now when we're looking at the RSI, the RSI is the relative strength index for those of you who do not know. Anything below 30 is typically means oversold. And when you're below 30, the stock itself is probably in extreme fear, could be a very good buying opportunity unless there's something catastrophically going wrong with the company. Anything under 30 is probably going to be a good buying opportunity. And then conversely, anything above 70 could potentially be giving you a good selling opportunity. Now, we have hung out below 30 for an extended period of time, and we have been above 70 for an extended period of time. So just because it dips below doesn't mean it's automatically going to bounce back up. It's just another chart indicator to give us an idea as to what is going on with the company. And right now we've been trickling down, sitting at that 37.8. And again, looking at this here, we may end up dipping down further, may pull down as far as that 325 gap. If we fill that, we'll most likely be down on an RSI around the 20 to 25 level. And at that point, we might end up seeing that reversal, bounce back up, and test that $400 level again. That's just my thoughts on what could potentially play out. Obviously, anything can happen, but based upon what we're looking at the charts and timing of what's going on with the news, that is what my crystal ball tells me right now. And now again, of course, I have no idea what's actually going to happen in the market. All I can do is take a look at what's going on with the company itself, what's going on with the macro environment, what's going on in the charts, and just kind of put those pieces together to kind of create what I think the near-term future story is. And again, it's all near-term future, next 3 to 6 months. That's all I'm looking at right now when it comes to those charts. When you're looking at long term, that's going to be minimum 3 to 5 years at a baseline when you're looking at long term. When you're going out that level, looking at charts really isn't going to give you much of an indication as what's going to be happening. You have to look at what's going on with the fundamentals of the company. At that point, you're going to be looking at FSD. You're going to be looking at Cybercabs. You're going to be looking at Optimus. You're going to be looking at the Model Q. You're going to be looking at energy. You're going to be looking at all of those other things for that 3 to 5 year plus range when it comes to long-term investing. None of that really is going to have anything to do with the near-term movements other than sentiment swings based off of the news. That's really all that you're going to see. That's where swing trading comes in versus long-term investing. But today's video is all about the short-term, the near-term stuff, the things that you can see for swing trading. So you guys can let me know in the comments below what you do. Do you swing trade? Do you play it long-term? Do you use the charts to kind of give yourself that buying opportunity when the stock price is coming down? Or do you use it as an opportunity to maybe trim a little bit off the top and kind of take some profits, but you're still going to play it long-term? Let me know how you guys play it in the comments below. Thank you so much for watching. I appreciate all of your support. Have a great one.